Have you ever wondered what could happen if you invested just $5 a day for 60 days? Welcome to this captivating journey, a voyage of discovery where we delve deep into the enthralling world of small investments. We are undertaking an exhilarating financial exploration today. This exploration isn't about amassing a fortune overnight. Instead, it's about debunking the myth that investing is a game exclusively restricted to the wealthy, and challenging the notion that you need buckets of money to start investing to begin this financial journey. We are here today to emphasize that even the most humble of beginnings can lead to grand destinations. Our focus today? The potential of investing a measly $5 daily, the price of a caramel latte, continuously over time, just for 60 days. It may seem insignificant on the surface, but as we unearth the potential of this concept, we're confident you will see the power of small actions that can lead to significant financial progress. It's not about the monetary value, it's about the discipline, the consistency, the decision to invest in your future, every single day, one $5 bill at a time. It's about understanding the potential that even the smallest of actions can have on your financial well-being. It's about the revolutionary idea that everyone can be an investor. Everyone can take charge of their financial future, and everyone can make their money work for them, no matter how little they start with. We'll break down the math, simplify the process, demystify the jargon, and show you the world of investments isn't a scary place. We'll take you step by step, day by day on this exciting journey, where each penny you put in can pave the way for a more secure and prosperous future. The most amazing part? We're not talking about thousands of dollars. We're discussing the potential and power of as little as $5 a day. A small amount, yes, but with great potential to grow and multiply. So buckle up, sit tight, and stay tuned to discover the power of small investments. This journey promises to be an enlightening one, not just for today, but for many tomorrows to come. Many people believe investing requires large sums of money. Is that really the case? Well, no, it isn't. Let's debunk this common myth that has been for far too long. Imagine for a moment that you're about to embark on a journey. If you're told you need a mountain of gold just to start, it would sound utterly ridiculous, wouldn't it? Just as ridiculous the notion that you require a large bank balance dip your toes into the pool of investment. These are misconceptions, and today we're here to dismiss them. Now let's pivot our discussion towards an intriguing concept, micro-investing. It's an approach that is all about investing in small, manageable amounts regularly. To better illustrate this, envision a drop of water. On it might seem inconsequential, but with drop by drop, it can fill an entire bucket. This is the essence of micro-investing. It's about investing not exorbitant amounts, but smaller sums that add up over time. Each drop may be small, but in time it can accumulate to a substantial sum. What makes micro-investing especially transformative is its inclusivity. It is an approach that breaks down economic barriers, making investing a viable option for everyone, regardless of income. So as we delve deeper into the topic of investment, let's remember this key point. Investing is not an exclusive club meant for the affluent. It's an enriching journey, and like any journey, it begins with a single definitive step, regardless of how big or small. The truth is, you don't need a fortune to start investing. Now, let's dive into the magic of compound interest. This is a concept is often referred to as the magic of compounding. Imagine a snowball rolling down a snow-covered hill. As it continues its journey, it gradually picks up more and more snow, gaining not only in size but also in this snowball effect is the perfect metaphor for compound interest. Let's unpack this concept further. Compound interest is the process by which the interest you earn on your investments also starts to earn interest. This process continues, with each new round of interest earning even more interest, thereby creating a self-augmenting cycle. This compounding effect can transform consistent investments into a substantial sum over a significant period. Let me illustrate this with an example. Suppose you have a savings account in which you deposit $100. The bank provides you with an annual rate of 2%. Consequently, after 1 year, you have earned $2 in interest, and your balance has grown to $102. A fairly decent return, wouldn't you agree? But here's where it gets interesting. In the second year, you don't merely earn interest on your initial deposit of $100, you also earn interest on the $2 you made in the first year. Subsequently, at the end of the second year, your total balance is greater than 104. This cycle continues with each year's interest earning further interest, and the total amount in your account growing progressively larger. This is the essence of compound interest. Now let's apply this concept to the routine $5 investments that many of us make daily. You're not just earning returns on these $5 investments, you're also earning returns on the interest these small investments generate, and then earning even further interest on that. The cycle continues, with the snowball growing bigger and rolling faster as time progresses. You might question, how significant could the returns be from a few cents or dollars? But remember, compounding is a long-term game. Over time, these small amounts of interest can accumulate into a significant sum. The longer you allow your money to grow, the more powerful the effect of compound interest becomes. Underestimate the potential of small regular investments. Every little contribution counts, and with the magic of compound interest, these small amounts can evolve into a significant wealth. As you can see, compound interest can turn small investments into substantial sums. So what happens when you invest $5 a day for 60 days? You might ponder, that's not a significant sum. What could it yield? Let's explore together. Yes, the initial amount is small, only $5. However, its strength is in the regularity of this seemingly minor act. Every day without fail, you're setting aside that $5 bill. It might not seem substantial alone, but when you accumulate it, that's $300 in 2 months. Now, let's introduce the magic ingredient: compound interest. Think of this, you're not just investing your $5 daily. You're also investing the interest you're earning on your preceding investments. You're basically gaining interest on interest. This is where the magic happens. This is where your small, consistent investments start snowball into something larger. Let's delve into the numbers. For simplicity's sake, let's assume a return rate of 7%, compounded annually, a relatively conservative projection in the investing sphere. After 60 days, your $3 would have grown to roughly $305. Now you might be thinking that's only an extra $5, but remember, this is only after 2 months. The genuine strength of this approach becomes clear as you persist. After a year, you're staring at an increase of more than $35. After 5 years, well over $1,000. And remember, this is all from investing just $5 a day. Impressive, isn't it? That's the power of small, consistent investments. It's not about the investment amount, but the frequency and duration of its growth. So, the next time you find yourself with an extra $5 bill, contemplate this tiny experiment. Who knows? It might just be the start of your journey towards financial freedom. Let's recap what we've learned today. Investing isn't only for those with vast wealth. It's a strategy open to all, even if you only have $5 a day to spare. We've debunked the myth that large investments are the only path to significant returns. The power of small, consistent investments is a force to be reckoned with. It's a simple, yet effective strategy that can lead to substantial results over time. Consistency is like a steady drip filling a bucket. Small daily investments can accumulate, leading to surprising wealth accumulation. We've also explored compound interest, where your money works for you. Each dollar invested generates a return, and that return generates its own return. It's a snowball effect, with your wealth growing exponentially. This power of compound interest makes your small investments grow over time. Our $5 a day experiment showed that small, regular investments can lead to significant wealth. It's about investing large amounts, but the act of investing consistently. So, what does this mean for you? It's never too early or too late to start investing. Remember, it's not about how much you invest, it's about starting to invest. We hope you found this video helpful and insightful. If you crave more financial knowledge, hit subscribe and become part of our community. Our upcoming content is packed with financial advice to optimize your earnings. We're curious about your views on small investments. Share them in our comments section. Appreciate your participation in our journey. Remember, every small step contributes. Start investing today.